Hey everybody, my name is Matthew Sambanis. I'm a certified public accountant. My firm is based in Long Island, New York. And today's video has nothing to do about accounting or taxes, but everything about Bidenomics, the current state of the economy, and the current state of the American citizen. Please be sure to like, comment, and subscribe if you are into the economy, into finances, economics, investing, the stock market, and other things of that nature. So I read an article recently about tax revenues declining. In particular, for 10 out of the last 12 months, tax revenues have declined. And what that means is people are working less and less, right? Or people are earning less, or there's less people in the workforce. And somehow every month, payroll jobs come out and they do better than expected and everybody wins and, all this other fancy stuff. But the reality of going off the numbers, going off the economics of the numbers and payroll, the pure real numbers of it all, they're declining. And the other issue at hand is tax revenues have been declining. That's been used to predict, or not predict, but have been a predecessor to 5 of the last recessions that we have, which we will discuss in a little bit. And basically, we have federal deficits that continue to grow out of control. October was the government's on what's called a fiscal year instead of a calendar year. So calendar year, January to December, January 1st to December 1st. Calendar year is when you pick at a random start date. A lot of publicly traded companies are on calendar years for whatever reason. So government's first month of the calendar year was October, and they had an $80 billion deficit, right? Imagine you're a private company or a public company and you have an $80 billion loss for the month. I mean, that's an astronomical number. That's, close to $1 trillion for the year. And, the government collects about $6 trillion a year. Never mind the fact that about $1 trillion of that is going to be soon for interest expense. But basically, the government's continuing to get bigger and bigger and grow and, fund all sorts of government stuff, which is bad in my opinion to go with or to begin with. And, the average U.S. worker is either working less, earning less, or not working at all, right? So like I said, 10 out of the last 12 months, government revenue has declined. And the issue is, in the real world, right, for a company to grow, and I'm trying to use the government as a parallel to a company so it kind of makes sense, right? So if a privately held company or a publicly traded company, meaning if the government were a private business, you have one of two ways to grow, either through debt or through reinvesting the money. And if you're taking on debt, then eventually, you keep on taking on more and more debt. And if it's not sustainable, then eventually you go bankrupt and you can't pay off your debt. And then that's what happens. Now, the government has another solution, which is to pay its way out of the issue at hand, which that's what they will do, unfortunately. And what that ultimately means is that the U.S. citizens or the people in America are going to pay massive amounts in terms of inflation. We have been experiencing some deflation recently, but that's going to change. The second the Federal Reserve goes back and lower rates like they're talking about or like everybody else is talking about, inflation is going to return, right? If the cure to get rid of inflation was to raise rates, then why would you go lower rates once inflation lowers? Because then you're going to spike inflation all over again. So it's crazy how the economists at the Federal Reserve don't know this, how Wall Street doesn't know this, and why Wall Street would be cheering it on. But unfortunately, it's the way of the world because, lower rates means easier money, and easier money means people invest in the stock market, and these huge publicly traded companies borrow money at low rates to buy their stocks back and increase the value of their stocks. So defaults, basically deficits aren't necessary if tax revenues increase. So look at the government like a business and look at its wages or its earnings from taxes, because that's how the government supports itself. Unfortunately, that's been declining. So you have a business which has been declining, but it continues to spend. So it operates at a bigger and bigger loss. And, one of the main things I wanted to point out here was for the last 5 recessions that we've had, If you look back historically in the early 80s, the early 80s recession that we had, tax revenues had declined. Before the 2001 recession, tax revenues declined, and then we had that 2008 Great Recession. Again, payroll taxes, tax revenue declined. Before the COVID recession, revenue declined, and now, right now, tax revenues have been decreasing. So again, if that's all tied primarily to the payroll tax, which is FICA, Social Security, and Medicare, people are working less and less or earning less and less. And even though they keep on raising the FICA wage limit, eventually, in theory, the dog dude's got to hit the fan. And, listen, even if it wasn't decreasing, you and I both know that under, quote, Bidenomics, where everything is great, it's not great. Cost of food has doubled easily in the last 2 to 3 years. The cost of everything is essentially doubled to tripled, even though they say it was only 8 or 9%. It's nowhere near that. It's 3-4 times as bad as the government says. And real wages have actually decreased. So, it's tough times out there. And, the Main Street media will report everything's grand, everything is rosy, the consumer is strong. The consumer is not strong. The consumer has 2 to 3 jobs because they had to replace their one good paying job, and they're going further and further into credit card debt, further and further into auto debt, further and further into home personal loan debt. And, so that's not the sign of a strong consumer. That's a weak consumer there. Student loan payments are now restarted, and that's going to throw a whole other curveball into this. Who knows who's going to stop paying what in order to pay their student loans and vice versa. Will that result in some deflation? Yes. Will it result in a lot? No. And is it temporary? Yes. So tell me, by the way, if I'm missing something or if I'm wrong or if Bidenomics is great and I'm wrong, please leave a comment below and tell me about it. It would really help me. I read all the comments. I reply to all of the comments, by the way. So I would greatly appreciate it if you did that. And again, I know I mentioned it before, but please be sure to like, comment, and subscribe. The other thing, if the consumer was that strong and the economy was that great, we wouldn't have a fall in savings rate, right? Savings would actually be increasing. And if it was that great, you can go get 5% on your money. If you have 100,000, you can earn an extra 5,000 a year, actually more because it's compounded monthly. Interest. That's a decent amount of money. That's at least a mortgage payment and a half, depending on where you are for a lot of people. But they're not. Their savings rates are plunging, their debt levels are going up, and it's not pretty out there. So one other thing I always try to comment on is how to profit. And how to profit from this: buy gold, buy silver, save as much money as you can. If you can't save money, if you need to continue to buy stuff, try to buy in bulk. Go to Costco. I love Costco. I'm actually going to buy stock in Costco. I'll say till I'm blue in the face. Or if you need to go to Target or whatever. The regular everyday supermarkets are absolutely astronomically priced. Consolidate your debts, buy foreign currencies. If you have money and you can find, good stocks, I would suggest buying stocks. Again, depending on foreign stocks, dividend paying stocks, other, investments of that nature. If you're not familiar with this, get a financial advisor. Make sure your financial advisor is aware of everything that's going on, not just some Joe Schmo who's going to put you in an S&P 500 index fund, but that's actually going to invest your money. And make sure you understand the risk to reward ratio as well. So higher risk, higher reward, lower risk, lower reward, but at least you don't lose your money. And never invest more than you can afford to lose. And if you're ever unsure about the first rule of investing, look at rule number 1. Never lose your money and never invest what you can't afford to lose. So basically, to summarize this, fallen tax revenues have gone through the roof. The Main Street media has spun this as Bidenomics is great. It's not great. Tax revenues are down. The consumer is down. The average American person and the average person in America is down. And, we need to hunker down for some tougher times, unfortunately. So with that being said, hopefully you found this helpful. And if you have any questions, just leave a comment below and we'll chat soon and see you soon. Thanks.